You are exhausted by the constant pressure to adapt. Every single day brings a new headline about artificial intelligence. You feel a creeping anxiety that you are already falling behind. You watch billions flow into new tech, wondering how to cope. Welcome to This Explainer. Today, we are breaking down a massive, anxiety-inducing premise. We are looking at whether this incredible AI boom is actually a financial bubble.
Let's run through our roadmap quickly. We have 6 parts today. We will cover the $500 billion bet. Then we look at the cost of AI infrastructure. Next is the overvalued tech trap. After that, finding the real AI moat. Then the dot-com warning. Finally, the return of boring economics.
Before we go deeper, let's get one thing straight. Asking if this is a bubble does not mean AI is fake. It does not mean the tools are useless. AI is an undeniable reality. The actual problem is much more psychological. The astronomical expectations surrounding this technology are completely detached from reality. We'd have to separate the functional tech from the wild fantasy of returns.
Section 1. The $500 billion bet.
We are way past the days of simple tech demos. The global corporate sector is making a historically massive bet. Look at the data from the Stanford 2026 AI Index. We are seeing an estimated $581.7 billion in corporate AI investment for 2025 alone. That is more than double the previous year. Private investment hit roughly $344.7 billion. Throwing billions around is incredibly easy when hype is peaking. The terrifying question remains, how much actual revenue will this create?
Section 2. The cost of AI infrastructure.
You have to look at the physical machine behind the software. Advanced AI requires absolutely massive physical infrastructure. You need millions of high-end GPUs and sprawling data centers. You need specialized networking and colossal cooling systems. All of this demands an unimaginable amount of electricity. To fund this physical build-out, companies are piling on staggering amounts of debt. A recent Reuters report revealed something truly startling about tech giants. Their AI-related capital expenditure might actually exceed the new operating cash flow it generates, too. Think deeply about that for a second. They are burning more cash on infrastructure than the new revenue it brings in. This exposes a massive, desperate assumption. They are praying that future AI revenue will eventually arrive to justify these enormous costs. They are building a 10-lane highway without knowing if anyone will drive on it.
Section 3. The overvalued tech trap.
We need to completely reframe how you think about tech bubbles. A bubble does not require fake or useless technology. The internet was real and smartphones are real. AI is unquestionably real and incredibly powerful. The overvalued tech trap happens when investors get blindly greedy. They pay highly speculative, fear-driven prices for companies with totally unproven returns. A breakthrough technology can change the world and be wildly overvalued at the exact same time. Capital is chasing these startups at a breakneck speed. The Stanford Index shows newly funded AI companies surged by 71% in 2025. 1. That flood of cash creates intense pressure and brutal repetitive competition. Imagine hundreds of stressed founders building identical AI writing assistants. They are all using the exact same underlying foundation models. It is a terrifyingly crowded space.
Section 4. Finding the real AI moats.
Principle 1 is understanding model commoditization. The underlying AI models are rapidly clustering together in overall performance. Startups face an existential threat as these foundations improve and drop in price. By March 2026, Stanford reported leading models becoming essentially interchangeable commodities. 1. If your only pitch is having slightly better AI, you are deeply vulnerable. Raw computing power is no longer your defensive moat.
So where does true value actually live? The real moats are the durable business fundamentals surrounding the AI. You need massive distribution channels and exclusive proprietary data. You must forge deep customer relationships and seamless workflow integration. If a company ignores these fundamentals, they do not have a real business. They have built an expensive, temporary feature that a giant competitor will soon copy.
Section 5, the dot-com warning. Principle 2 is grounding yourself in historical context. Before predicting a market crash, you must anchor yourself in current reality. Generative AI created an estimated $172 billion in annual U.S. consumer surplus by early 2026. That is massive, undeniable economic value. Real professionals are saving precious time and drastically boosting their daily productivity. The utility is a proven fact, but corporate valuations remain entirely speculative. Think back to the chaotic dot-com era of 1999. The internet itself obviously did not fail. Thousands of weak companies vanished overnight, but the underlying tech became our global infrastructure. The bubble ruthlessly destroyed the bad assumptions, not the core technology. Our 2026 AI era will likely follow this exact same brutal pattern. Insane valuations will collapse, but the core AI infrastructure will survive and ultimately thrive. Section 6. The return of boring economics. Principle 3 is mastering the boring fundamentals. If you look past the noise, the future winners will not be flashy. True success requires generating actual revenue and aggressively defending profit margins. They will not rely on viral social media demos to survive. The real winners will quietly solve expensive, painful problems for their highly retained customers.
This AI revolution is finally entering its mature, rational phase. We are moving past the initial shock and awe of the technology. The market will stop marveling at the raw power of the models. Instead, it will ruthlessly demand answers to one simple, grounded question. How much real money can this product actually make? AI must face the harsh reality of fundamental unit economics and true profitability.
We will end this explainer with a vital, challenging thought. The biggest technological revolutions create the biggest fortunes and the biggest bubbles simultaneously. AI will absolutely rewire the world we live in, but surviving this shift requires deep focus, rational analysis, and ignoring the endless hype. Keep your eyes on the fundamentals and choose your path with clarity and absolute intention.